To help make sense of the February budget and economic forecast, state economist Dr. Kalambokidis now joins me in the studio. Welcome.
Thank you.
MMB Commissioner Myron Franz pointed out that this is the 8th positive budget forecast in a row. In addition to the administration's fiscal policy, what is it about such long periods of economic expansion that causes misgivings among economists?
Well, the misgivings come from the fact that business cycles move in a cycle. And so when you have a period of recovery from a recession along with an expansion period, eventually you should expect a recession to come. The business cycle is going to turn down. And at the moment, we are in one of the longest economic expansion and recovery periods on record. So it's almost tied for third, it's fourth longest. And while people don't necessarily think expansions die of old age, statistically, the longer that expansion goes, the riskier the bet that that growth will continue.
Is it fair to say, in terms of yesterday's February forecast, that U.S. policy does not usually impact the state forecast as much as it did this time?
Yeah, there's always some uncertainty about U.S. policy. Minnesota's economy is tied closely to the U.S. economy, and there are changes in federal fiscal policy that can affect Minnesota. But this does feel like there's more uncertainty than usual because it was a pretty big change in Washington, and some of the policies that were discussed or proposed during the election were things that were quite different from the policies that we had been used to.
Commissioner Franz also emphasized yesterday caution because not all factors were able to be considered in this forecast. For example, we don't yet really know what our federal policy on trade will be. So what would happen to Minnesota's economy if something changes and farmers start having trouble exporting their crops?
Yeah, the sectors that depend on exporting, so those would be manufactured goods in Minnesota, goods that are manufactured here, agricultural commodities, as you mentioned, iron ore. All the businesses in those sectors are watching this trade policy discussion and trying to figure out what it's going to mean to them. It matters a lot that they be able to reach markets for their products. We're in a global economy, and farmers in Minnesota are producing crops, producing corn and soybeans in particular, that are meant for customers all over the world. And so they want to be able to reach those. What happens in trade policy will affect their ability to do that. What happens in trade policy will also affect the value of the U.S. dollar, and the dollar's strength right now makes our goods more expensive for our overseas customers. And so that's another thing that they're watching. And when you're looking at trade policy, you have to think a couple of steps ahead. So you can't just look at, well, if the U.S. is going to have a protectionist policy or a policy that's trying to support exports, that might be good for the exporting firms in Minnesota. But you always have to imagine that the country on the other side of that transaction is going to act too. And that can affect our ability to sell our goods overseas.
So there's a bit of a chess match going on.
There certainly is.
Let's talk about immigration policy. The state has a low unemployment rate. We have a projected worker shortage as the baby boomers continue to retire. So how would not having enough workers, if immigration policy, I mean, that's where many of our workers are going to be coming from. So if immigration policy changes and we don't have enough workers, what would that do to the state's economy?
So a couple of things that a worker shortage or a tight labor market, it's a couple of things that does. One is it raises the demand for, doesn't raise the demand for workers, but it can raise wages, because when you have high demand and tight supply, wages can go up. But it also can limit companies' ability to expand. So businesses that want to expand and are having trouble finding workers, some of them are thinking of ways to replace workers with equipment, so switch to computers or new technologies. And that can happen, and that can be a good thing in the economy because that can raise productivity of the workers that do have those jobs. But some firms are not going to be able to do that, and they're simply not going to be able to expand because they can't find the workers.
If wages go up, does that also then affect the price of goods? Does that bring in a possible inflation?
So it depends on how quickly wages go up relative to prices. So what you'd like to see is that wage increases outpace price increases so that workers, who are also consumers, are able to do a little better.
Let's talk for a minute about healthcare policy, because that's also sort of up in the air. What are some key points to watch in terms of the state economy and the possible various health policy changes?
Yeah, so one thing to look at is the reimbursement rates and the amount of money that the federal government sends to the states to take care of health care. And so that's something that I'm sure our budget director and commissioner are looking at. Another thing to pay attention to is that Minnesota has a relatively low rate of uninsured people. And that makes us all better off when everybody has access to health care. And so that's going to be a factor going forward, is to see if that changes.
The surplus was forecast in November to be $1.4 billion, and yesterday's forecast says it's $1.65 billion. So where did that extra $250 million come from?
Yeah, so there were some offsetting changes. Our revenue forecast increased and our expenditure forecast increased, but the revenue forecast increased enough to offset the expenditure forecast increase.
And finally, you said that IHS, who handles the numbers for the state of Minnesota, incorporated federal stimulus in terms of the tax cuts that they expect from the Trump administration and also the infrastructure that they expect investments in, beginning in 2018. With the uncertainty in the other areas of policy, is it optimistic to throw that in the mix?
So IHS produces the U.S. outlook for us, and then we do the Minnesota outlook. Okay. And you know what they did, what they were clear about doing was that they decided that they could incorporate into the outlook factors that they were pretty sure were going to happen, that they had a fair amount of confidence were going to happen, and that they understood what the outcome would be. And then they did not incorporate things that were so much more uncertain. There's a fine line between forecasting and guessing, and so they stuck with forecasting rather than guessing. They also did incorporate into the U.S. outlook the spending freeze, the non-military, not spending freeze, but the hiring freeze at the federal level. And so they didn't just incorporate things that were going to boost the economy. They incorporated what they thought was most likely to happen.
Dr. Kalambokidis, that's all the time we have, but thanks so much for coming.
You're welcome.